Hello, my name's Liz Rowlinson from A Place in the Sun, and I'm here with Chase Buchanan on a webinar of Avoiding Costly Mistakes Abroad, an expert's guide to expat financial planning. Welcome, everyone. Today we're joined by Edward Dean from Chase Buchanan. Hi, Edward.
Oh yeah,
He specialises in helping clients navigate the financial challenges that come with living, working, and retiring abroad. We'll also meet Philip Lynch, one of Chase Buchanan's happy clients. Over this session, we're going to be diving into how to manage investments across continents, plan for retirement efficiently, protect wealth across generations, minimize tax liabilities, and practical strategies you can start using right away. Whether you're living overseas or you're thinking of moving abroad, or simply curious about how to optimize your international financial strategy, this conversation is packed with valuable insights, we hope. Edward, let's begin with yourself. Can you tell me a bit about your background?
yeah, of course. So I studied economics at university to originally get me or experience within the field. Since then, I've spent over a decade now specialising in international financial advisory. Outside of work life, very happily married man, and we've got an 18-month-old toddler at home who causes plenty of chaos to keep me on my toes.
I bet. So, as far as Chase Buchanan, I'm sure people viewing would like some background about the company. Can you just tell us a bit more about Chase Buchanan?
Yeah, of course. So Chase Buchanan specialise in dealing with individuals who have got multiple assets in multiple jurisdictions. In today's globalized world and economy, it's not unusual for individuals to have worked in one, two, potentially three different countries and want to retire somewhere all completely different. And so it's understanding how can that international asset base work for you while remaining compliant in all of the distant jurisdictions. And that's what Chase specialize in.
Perfect. Okay, well, we're going to try and tackle some different areas of your expertise. We're going to talk about client onboarding and service approach first. Now that we know more about the company, could you walk us through the typical onboarding journey from first contact to receiving a tailored financial plan?
Yeah, of course. So individually, it would be similar to today. So we'd hop on a call with an individual, or we'd drive to the local area to come and meet somebody. And it's really understanding the basics. Not to give a politician's answer here, but because it is so tailored down to the individual, we really need to understand what's important for you and your family. I'm sure you can appreciate, my own opinion would be different from your own. And so it's understanding, right, how can we tailor this down to you? And so an initial one is exactly that. It's getting to know the bare bones. Once we've found out that key information, we'll then start to build on that process through follow-up conversations, as many as need to be had, until we get to that point where we've got a specific tailored situation for you and your loved ones, whatever that looks like.
Okay. And what information would clients have to have ready before that first meeting?
For the first meeting, it's fairly friendly. We want to get to understand you in a relaxed as environment as possible. So you don't need to bring reams of paperwork. You don't need to have dug out pensions from 10 years gone by. We can certainly do all the hard legwork at a later point. For the initial point of view, it's really just understanding what it is you're looking to achieve.
Okay, and how do you support long-term relationships with clients across different regions of the world?
Yeah, that's an ongoing relationship. So really, it needs to evolve with the clients as well as they move from potentially being in a position where you're growing and accumulating an asset base. So you're actively working. That relationship's very different to one where you're actively drawing down on the portfolio in retirement. The easiest way to do this, and again, it's no one size fits all, but for most of my clients, we'll speak on a quarterly basis so we can keep in touch as much as we need to. It may well just be touching base to say nothing has changed and everything's ticking along fantastically great, or it may be to say, actually, I've got a promotion at work, or indeed we're starting to look at winding down and retiring. So constant communication is probably the number one answer to that.
Okay, and you're probably dealing with some quite crazy time differences. How do you ensure meetings stay convenient despite these sort of differences in location?
Yeah, of course. We work on a globalized framework now. So I'm able to sign in the morning and speak to someone in Australia. And then in the afternoon, I can speak to someone in California. One of the, dare I say it, one of the positives that's come out from COVID is this international world where we can log on, use Zoom, use Teams, and be able to communicate with people. Also, we use mediums like WhatsApp and email just to be, again, constantly available as and when members need us.
Okay. And as the needs of these clients evolve, or circumstances change, how do you adapt your service approach?
Because it is so specific and tailored to the individual, having that communication ready in the background means I know as and when a client's situation is going to change, that we can start laying the framework for them to make that move in the future, or indeed ensure that the portfolio is ready and set up as they want to step up into that change, whatever that may be to them.
Okay, and how do you ensure transparency with fees, and investment performance?
Yeah, this is perfect and really easy for us. So we operate under a MiFID style license, which essentially means it's all around transparency and understanding. So before any client puts any pen to paper, they'll understand all of the costs and charges involved in black and white so they can make an informed decision when they agree to become a client of ours.
Okay. Um, you did mention a quarterly meetings just now, but what does your communication process look like after the initial plan is delivered? How often do clients hear from you?
This is very much up to the individual. To put it in perspective, I got a couple in France who get a WhatsApp or like a WhatsApp at the end of the year, just to say how things have gone. Great. And on the other side of it, in particular at the moment, I've got a client who's thinking about what's going on over in America, and so we have a fortnightly call to keep them as much informed as they would like to be. But really, we set the quarterly reviews out as almost we're going to catch up with here if you need it. But at the same time, all of my clients have got my WhatsApp, they've all got my email there. So as and when life takes precedence, we can be in communication to let them know whatever it is that they need updating on.
Great. Well, thanks for that info on the onboarding process. Before we move on to the next section, we're just going to hear from Philip, who's kindly agreed to share some experience of you managing their finances and professional guidance. Hi, Phil. Good
Morning.
to see you today. Thanks for being on this webinar. You're going to tell us a bit about your experience with Chase Buchanan, but just briefly, how long have you been working with Chase Buchanan? Was it because you owned a home abroad?
No, I started working with Buchanan in about 2017. I was working abroad. I was based in Saudi Arabia,
Mhm.
and I was starting to get a lot of contacts from companies in Dubai about dealing with my pension and the possibilities of transferring a pension out of a company pension scheme, BP, to a SIP. Very aware that there's a lot of potential problems in companies, scams, etc., going on. And one of my friends, one of my contacts, suggested I contacted Lee. I did, and Lee, a confirmed that there are a lot of scams going around, but then talked about how Chase Buchanan are very clear about working under the UK legislation, even though I wasn't based in the UK, and that put me at a lot of ease about working with you.
Yeah, that's great. Did you take any other steps to sort of research your options and make sure you felt confident about working with Chase Buchanan?
I talked to some of the other companies, the ones in Dubai, and obviously they're very pushy, very aggressive, and talked to Lee, and we went through a lot of let's talk about what your options are, what you want to achieve, and that's what really got me to move, to be happy to work with you, in that grounds of that. A, you got the compliance, and then B, there was an effort to understand where I was and what I was looking for.
Great. So what does your relationship with Chase Buchanan look like at the moment? I
Uh,
mean, in what ways do you feel that they support you?
uh, Obviously, we have regularly about once a quarter updates with Ed to talk about where the funds are, what's happening, etc., possible adjustments. Um, that works very well. And I've got anytime I've got any questions or queries, I want to do something else, very easy to get in touch with. So it's been very easy to work with JP Cannon in these years. And they have Ed and Lee have taken time to understand my and my family's particular circumstances, in that it's not a standard UK family. My partner, my wife, is Russian, so that generates a lot of other issues. And there's an age gap between us, which is one of the reasons why having a personal pension plan made more sense.
Okay, so did your experience of working with them sort of marry up to what you might expected of working with a financial advisor?
Yes, oh, well, yes, and there's a certain bit where it exceeded.
Mhm.
So yes, I get the regular updates. We talk about where my position, my view of risks, and how we manage those. The bits where I think where I've seen some exceeded expectations was in two areas. One, I think Chase Buchanan have worked hard to take costs out of the plan by going direct to shares with Brew and Dolphin rather than doing trusts and saving some money there. And the second area was, I've got children who I've been investing money on for over there until they get to 18. And then when they get to 18, obviously the money becomes theirs. And working with Chase Buchanan, they've also worked with the children, even though it's not as big a fund, to get them ready for their investment journeys in life.
Very exciting for your children. Well, thank you very much indeed, Phil. That's really useful. Thank you.
You're welcome. Thank you.
Great. So, myth busting section. I love this. Thank you so much from Philip there. Moving on now, we'd like to talk about some common misunderstandings. There are so many myths and much misinformation around international finance advice. We'd like to explore some of these. Um, there's so many people leaving abroad to build new lives, retiring, relocating, working remotely. Moves can often lead to misunderstandings and, unfortunately, poor financial decision making. So,
Mhm.
Edward, let's talk through some of the biggest myths that you come across. The first one, international financial advice is only for the wealthy. What's the reality here?
Yeah, this is a question I get asked all the time. Is my portfolio big enough to be dealt with by a professional? And the answer is, yes, we can help everyone from all walks of life. And it's not necessarily down to the understanding of your portfolio as it is today. A lot of what we do is around structuring asset bases to make sure that it can work hard for you in the future, as and when things are growing, or as indeed when you're looking to make a move, to ensure that you're structured from a tax efficiency perspective. So it's not all down to the ones and zeros in the underlying portfolio.
Great. Here's another one you hear a lot. International financial advice is too expensive. Is that accurate?
No, I don't think it is. Again, look, you're paying for a service. And the reason we've been able to grow and expand that service is because we've got numerous clients who have found the transparency on the cost to be nice and clear and in line with expectation. And from that, we've grown the business because they've referred it on to family, friends, colleagues, whoever it may be. And I think the key thing here is because it is so transparent and clear and understood, they realize that actually, no, it's perfectly within expectation.
Perfect. Another one is UK financial advisors can handle international issues. Can you explain why that's not always the case?
Yeah, so a UK financial advisor will be a specialist within the UK sphere, and they will be phenomenal at their job. I have no doubt about that. But as and when you move jurisdiction, there are a whole other remit of regulations and authorizations that you need, and local knowledge and expertise to understand that situation as it changes. And so while they may be able to help in some areas, if you're moving to a completely different tax structure, tax remit, how does the UK impact that? And it will play part of the equation, but it won't be the whole area.
Okay. Some people believe international advice is too high risk. Would you agree?
Again, a common misconception, really, when we talk about risk, it's all down to the individual. whether you're a low risk or a high risk character, everything we do is tailored down to you to the nth degree. And so your portfolio, whether it be domestic or international, will carry a risk profile that's appropriate to you and only you. And that will evolve over time. Typically, as we're in the earlier working stages of our career, we've got a slightly higher risk tolerance. As and when we're drawing down, it tends to creep down over time as well. So it will be an ever moving profile, but no, there's no set risk tolerance for whether you're UK, Spain, Portugal, or Timbuktu.
Great. Now, this is a big one, especially with the AI at the moment. You can manage international finances easily with online resources. What would you say to that?
Yeah, we get a lot of questions around this, and we get a lot of outside information that's brought to our attention by this as well. And look, that's great. It's really, really key that clients do their own research. And AI is a fantastic tool, but it's in its infancy when it comes to specialist advice, particularly around sort of taxation and jurisdictional processes. And so use it, use ChatGPT, go on there, use these AI tools to help build a basis of the knowledge, and then go and speak to a specialist so that you can really hone it down and understand exactly what it means to you. And so it's a great tool to use, but I would just say be careful. If you're going to trust your life savings to an AI chatbot, that's a lot of confidence. Certainly go and support it by getting a professional opinion from someone who's qualified and regulated as well.
Brilliant. And finally, there's the belief that language and cultural barriers make international advice ineffective. Is that something you've come up against?
No, actually, this is one of the areas where Chase as a business thrive. Because we specialize in looking after individuals who are in the international landscape. We've got individuals who will speak the local language who can help provide with local tax advice. We will have a specialist in the jurisdiction to be able to help overcome that barrier that individuals may face as and when they move. So I would say on the opposite, it's actually probably one of our strings to the bow.
Okay, great. We're going to touch on some expat financial planning and investments next. We've got a broader view of misconceptions out there now. Thank you. Firstly, what are the most common financial planning mistakes expats make, and how can they avoid them?
Probably the most pressing one that we come across almost on a daily basis is individuals who, and it's not to say it's too late, but they've not necessarily taken advice when they could have done. We've been able to save clients millions, if not tens of millions of pounds over the year by getting ahead of the curve early, prior to making a move, looking and seeing if there's a process that we can take or a structure we can set you up in so that as and when you make the move, you're much more financially better off. And so I would say, look, there's never too early to start. 5, 10, 15 years might be a bit too far away, but certainly 12 to 18 months, start to get the wheels turning, start to understand and familiarize yourself with the process.
Great advice. When clients have assets spread across multiple countries, how do you approach tailoring wealth management strategies for them?
Again, a bit of a politician's answer here, but because it is so specific to the individual, there's not one solution that suits everybody. It depends on the kind of assets that you have and the kind of goals and aspirations that you and your family are looking to achieve. And so again, to answer this, the best answer would be to start speaking with a professional sooner rather than later, understand what that would look like, how the different jurisdictional processes work, and how your asset base can work for you.
Great. And sort of related to that is for those clients investing in multiple currencies, how do you help them manage currency risk?
Again, similar answer, that we'd really want to understand what you're looking to achieve. Is this a short-term move? Is this a long-term move? Do we need to ensure that your portfolio is correctly hedged to mitigate against currency exposure? Active diversification across all of our portfolios helps protect against this. But it really needs to be tailored down to you to understand what kind of asset you're going to be, or what kind of currency you're going to be drawing on in the future. How long term are you planning on drawing down on this one particular currency? And do you have an international portfolio made up of different currencies to help cover this bridge? These kind of conversations can help to plan. Again, it's all based around efficiency to ensure that all of your hard-earned work goes back to you.
Okay. And when clients begin withdrawing from investments, how do you help them make this happen in a tax efficient way?
This is probably one of the biggest strings to our bow, really, when we're looking at helping clients. A lot of it is to do with asset drawdown. Again, how can your hard-earned money come back to you in the most tax-efficient manner possible? And there is no one size fits all. It depends on what kind of asset base you've got. It depends on what kind of structure it's in. It depends on what kind of jurisdiction you're in. But at the end of the day, our job really specializes in ensuring that asset bases that individuals have spent a long time accruing and building up are going back to them in the most tax efficient manner. And so we'll review that on an ongoing basis and ensure that it's working to your desire.
Okay. Moving on to tax planning and compliance, and some tax-based questions. I know that tax residency can be confusing. How do you help clients understand that?
And this one's relatively easy for us, actually. I could probably give, and again, it's down to the individual, but if you come on an introductory call with one of our team here, they'd most likely be able to tell you where you're a tax resident and how to work that out. So that's actually, if you're not exposed to it on a daily basis, it can certainly be confusing, but because this is what we do on a day in, day out type situation, that's somewhere that a specialist can help provide an answer relatively quickly.
Great. And how does Chase Buchanan help clients stay compliant with tax obligations across multiple jurisdictions?
Yeah, of course. So we are regulated and authorized across a whole multitude of different remits. And within that, you've got both domestic and international specialists who will be able to help. This is an area that's really, really vital. The clients look and consider to ensure that they are compliant and ticking the right boxes. No one wants to get into a new jurisdiction, a new country, to settle down, to unwind, and then find a brown letter in the post with however many thousands of tax bill because you've not set things up as efficiently as you could have well have done. So again, I would really encourage to start speaking about this sooner rather than later.
Great. And final question in this little section. What strategies do you typically recommend for minimizing tax liability without increasing risk?
Hard to answer without the individual specifics of a case on this, but I suppose an easy one that would apply to absolutely everybody is active diversification on the portfolio. Regardless of the kind of risk profile you're going to be in, whether that be cautious, balanced, or adventurous, you are going to be actively diversified across the portfolio. But there are other methods that we can use to ensure that you are as tax efficient as possible, while also ensuring that the risk is specific to you as an individual.
Great. Right, we're going to move on to pensions and retirement planning, which is a massive subject, I know, for especially people at Place in the Sun. A large percentage of your clients are fortunate to retire abroad, and pensions can get very complicated if you want to transfer them or not. What are the key things people should be aware of?
The process and how it would work, what kind of pension you have. A lot of people, I myself have been guilty of this in the past, is you'll get the pension letter once a year, you'll have a look at it, you'll go, great, the number's gone up, and it goes into the pension drawer to be left alone for the next 12 months. Starting to take an active approach and understanding what you have is really, really key. The next area that a lot of people really should consider is sort of how that works in the jurisdiction that you're going to be moving to. For example, the tax-free cash element, can that be utilized prior to a move? Is it going to be tax-friendly in your new environment? Not every country operates like the UK does, if we're talking about a UK pension, for example. And so that's a really key area that people should be speaking with.
Okay, so yeah, you've alluded to that, but what challenges can expats face when managing pensions across multiple countries?
One that would spring to mind would be currency, communication with the firm. Once you change your postcode, and this is something that we see time and time again, is actually the ability to communicate with your domestic scheme becomes that much harder. The international barrier does come up and it raises its head, either that be from a logistic or a time zone, whatever it may be. And so ensuring that, in effect, correct management of this asset base, which usually next to one's property tends to be a relatively large part of their base, it is so vital that you get it right to make sure that it's pulling in the right direction, that it's working hard for you, and not being left to gather dust.
Okay. And how do you help clients avoid double taxation on their pension benefits?
Again, structuring the asset base to ensure that it's compliant from a local jurisdiction. One of the good elements is that actually the UK has got DTAs with the majority of countries that we're working with. But again, it's understanding that from a client's perspective. How is that income taxed domestically? Or indeed, if we're talking about pension income, making sure that the correct codes are applied to your UK pension to ensure that as and when you're getting paid, it's not getting held by the tax man. It will come back to you at the end of the day, but I'm sure everyone would rather it be in their pocket rather than HMRC's at the end of the day.
Okay. Final section of the webinar, cross-border estate and inheritance planning. Um, as we begin to wrap up, estate planning is often one of the most complex areas for expats. How do you support clients with cross-border inheritance planning as part of their long-term strategy?
This is a really key area of what we look to do when we're looking at a client's holistic overview, is understanding, okay, you've worked hard your entire life, you've been fortunate enough to build up a sizable estate. Again, a lot of it boils down to taxation, which is how can it go where I want it to go, be that to family, friends, charity, whatever it may be. It's structuring the asset base to make sure that it ticks the right boxes to ensure that it is as compliant as possible. Again, having these kind of conversations earlier. If you're looking to bring children in, having conversations with family to understand that they know how the process works. If you are the financial head of the family and no one else understands how this asset base works and you unfortunately pass, it's a very, very stressful time. And again, it's a part of our responsibility to make sure that that transition is as smooth, as easy as possible. We don't want to be boring people to death with the ongoings of taxation, but understanding the process is really key during a stressful time.
Sure, yeah. And finally, when clients are thinking about passing wealth across generations internationally, which I think Phil alluded to, what are the key considerations you encourage them to keep in mind moving forward?
Flexibility and access is a really key one, ensuring that, life throws curveballs every now and again. So ensuring that as and when you need to, you've got the ability to take control of your asset base in whatever format that looks like to you. The multi-jurisdictional process. What does inheritance tax look like in your country? We might understand it from the UK, but the UK is different from Spain, is different from France, is different from Portugal, for example. And so again, it's understanding how that works on an international basis. Is so vital to mean that the assets are structured in such a way as to tick both boxes. If we've got domestic and international assets, ensuring that they are correctly established. But I suppose, to give a nice cheat to all listeners would be make sure that you have a will established in every jurisdiction where you have an asset base. That's a really nice, easy way to take a bit of strain off loved one's shoulders when dealing with inheritance.
Yeah, great piece of advice. So, Edward, I think we're running out of time. So, thank you so much for sharing your insights today. And thank you for all viewers for joining the session. We've covered a lot, common myths about international finance advice, managing investments, taxes, pensions, and estate planning. If you're considering moving abroad or looking to optimize your global financial strategy, we hope this session will give you valuable guidance and advice to put those into action. And for anyone who wants to learn more or discuss their personal situation, Edward and the team at Chase Buchanan are ready to help. So thank you so much, Edward.
Thank you. Pleasure.
Goodbye.
Bye bye.